this live. Okay, it's recording. So how are you guys? You're good? How's your week going? Friday, and also Friday and August. August is a horrible month for price action. So very difficult markets right now. Conditions are awful. So very bad conditions. So as you can see during the week, if you go to the Forex calendar, let me show you. Give me 1 second. So give me 1 second. Okay, so I will do it bigger so you can see it better. Where is this? Here. Okay. So as always, before the week start, I like to put the previous week high and previous week low. This is a dollar index in the left side. On the right side, I have Euro USD and GBP USD here, so I can detect divergences and weaker and low, which asset is weaker, which is stronger, and see how asymmetry in the market among these three assets is going, no? Because that's a lot of information if you know how to read it. That's important. So the fact that, well, Monday and Tuesday we have a holiday, not holiday, but no high impact news, which means price will be very erratic and you will be in a very bad condition to find a setup. So the best days normally are Tuesday, Wednesday, Thursday. Even better if you have news, okay, because you can somehow read the market and predict how it will construct the narrative on the price. Friday is 90% of the cases are a day to avoid, so be careful. Monday and Friday are days to be extra careful and, if possible, avoid. So what happened this week? We have Monday and Tuesday, no news, no high impact news. So price was just slowly constructing this kind of uptrending to the upside, right? And on my high time frame, I'm bearish still on dollar. So if I'm bearish on dollar, I will be bullish on Euro USD, GBP USD. And so I was thinking, okay, prices are going high, but I'm bearish in the big time frames, right? So I was thinking, okay, maybe is this just a fake movement prices are doing to later collapse and drop. I didn't expect this extreme drop to the downside, but at least it's good because it confirms my bias. In my private group, I have more data, more info about my bias. I'm very brief here, but so basically I was still bearish on dollar. I saw this huge wick here. You see it, this wick, and I measure the midpoint. I will show you how the magic works here. So basically, when you have these huge wicks, only wicks, give me 1 second, it is treated like an imbalance. So I was considering this midpoint, this level. As you can see, price traveled from Monday to Friday, to today, to this level, which is the midpoint. And this midpoint is critical because sometimes gives you the information you need to confirm the bias you have. So if my bias is still bearish, it makes a lot of sense prices going higher and higher and higher until this point, because this we can see is like just like a fake movement, a fake fake movement. Yeah, so because later price just will drop and continue lower, which I have some levels here waiting for being targeted. But yeah, so that was my bias. I was checking this midpoint, this orange line, to see how price reacted. And today we have this high impact news at 10. You see the Fed chair Powell speaks. That was the news that makes this drop from here. You can see at 10 o'clock perfectly. And if you know power of 3, you know power of 3, and you know how price makes the construction starting from midnight, which is, you see this dotted line here, very tiny, and you see this horizontal dotted line, very tiny. That is the midnight price opening. Always New York time. You see New York time here? Okay, that's important. Always work, at least in Forex and indices, always work with a New York time zone. So what we have here, the fact that price opens the midnight and went higher, okay, and then start to falling. Basically the fact that price starts higher and going higher here, it makes me think, okay, if you know power of 3, you know normally there's a when price opens the day at midnight, there's like a fake movement, which is just like a fake movement to make believe traders without the knowledge that price might continue higher. But I like when price going higher if I'm bullish, because I know this is a high possibility this is a fake move. Let's go to 5 minutes. Here we can see how price went higher, and here we have a nice market structure shift. You can take this low here, and you see displacement. You see intention of price to going lower. Where is this? Market here. Market structure shift, right? So price when lower here, breaks the minimum, this low here, retrace, as you can see here, to this. We can treat this like a breaker also. You see a high, low, high, high, and breaks. And also price left this relative equal low structure. You see from this point to this point. It's kind of a relative equal low situation. So that's very good, because once price retrace, you can expect price will smash that level. So when price break this low, or even you can wait, if you're not sure, you can wait from here. Here is very clear the break was this low was break in this situation. So here you have a breaker, high, low, higher, high. This 1 minute. You see how it creates this kind of relative equal lows here. If you can imagine this level like this. Okay, so you can Fibonacci maybe, if you want, you can expect retracement. It touched the midpoint. Sometimes doesn't need to go higher, but this is not the 100% entry you want to take. You would like to go a bit higher, but also you have the breaker, which was this zone was high, low, high, high, and we can take this lower zone like as a breaker. As you can see, it matched the breaker. So this is a bearish breaker. So from here, you can't project the price will very possible going lower from here, because all the week was going higher and higher and higher. And remember this orange line, this is the midpoint of the week, 4 hour week we were measuring here. Remember this orange line? So this is a huge imbalance. It's like a fair value gap imbalances where price will rebalance. Okay, and it went higher, touch the midpoint. Midpoint is very important to have in mind. So from here it just dropped. So guys, if you have any questions, there's a chat, you can send any questions or whatever you're thinking. I'm a bit sometimes saying things without 100% describing everything, but if you want to say or share some thoughts, you're welcome. So I was bearish on dollar. Okay, that's one thing. I was a bit angry because on this asset, French, how you call this, French in English, franco suizo en español, but in English, Swiss franc, Japanese. Well, anyway, this one, I was waiting for taking a long position from this imbalance, from this 4 hour imbalance. So you can, if you do a Fibonacci of this range, sorry. It is inside the optimal trade entry zone, which is between 0.79, 0.62, and I had this 4 hour imbalance, 4 hour fair value gap, which match also with this inversion fair value gap. So it was a lot of coincidences, you know, and I was very excited to take a long position from here. I was waiting, but you know what happened? It happened that I was waiting for a confirmation that never happened. As you can see here, even if I go to lower time frames, there's no confirmation, like strong confirmation. Normally I like 5 minutes, 50 minutes, but it just ride without me, you know. It just came here, touch a bit the imbalance, the 4 hour imbalance, and it runs away. My idea to take this trade was something like, okay, price goes down and makes a lower low, and then breaks this previous high, and then I search for an entrance here, and then I inside the trade. But it didn't happen, so I was a bit frustrated, because as you can see, the trade was beautiful from this fair value gap, and I was targeting these relative equal highs here. Let me show you my target. First target was of course this, right? But also this one, because if you have a bit of imagination, these two highs makes a relative equal highs. So that was my target. So the trade would be like this. You can put in this low stop loss, and you can aim for this high. So that was the trade I couldn't take because price just ran away. It didn't make the confirmation I was looking for. So yeah, but at least I think okay, the analysis was good, the bias was good, so will be another opportunity, right? So that's one thing. And here I have the ES here on the left, Nasdaq on the right, and Dow down here. So I also was long here. I was long and I was aiming this high here, but I thought price will take this short with this low, and I close the trade, and then they're flying away, and yeah, should happen sometimes. But the thing why I was still going long here was because I have these SMT divergences, as you can see here. Let me show you. Let me put this in order. So it can be a bit tricky. Where is this? Here was the MCT. Yeah, here. You can see here we have this divergence. We have higher high. Also here is correct. They are going the same direction, but not here, not in Dow. And also in this as 30, no, Dow. I mean this asset. How to pronounce it? US 30. Okay, so as you can see here, the asymmetry was not correct, or not was like the others, you know. So that's an indicative of, let me put this. When you see this, one is doing different thing from the others, like this, you can expect that the one who is not doing the thing like the other is making a fake movement. This fake movement is most of the time just to take like a stop hand, you know, just to take a stop losses positions for later continue to the real direction, which later shows is still bullish. Okay, so when I saw this Nasdaq ES, and ES was telling me their intention. The intention was still not interested in going lower. Okay, that means the only one which went lower was US 30, as you can see here. So I thought, okay, maybe this is a fake movement just to grab the stop losses positions to later going higher. So from here, and also during the week, price was falling. So a retracement has to happen, you know. So that made me think, okay, from here I'm searching a long position. Okay, so let me check this. So I'm checking also, we have another divergence, low, low, and high. As you can see here, low, low. Let me do this correctly. And high position, and high from here. Even I'm not so sure. Okay, it's from here. Is this low? So we have another divergence, which also makes you think, okay, something is happening here. So what happened was like, you see how opens the day open here in Nasdaq and ES. Just when price opened, the previous low of the day, was take. Sorry, my English, guys. So yeah, price was took the previous day of the previous low of the day. Normally, if that happens when price opens the midnight, the day, you know, when the day opens at midnight. So when that happens, you see, with this, I have this indicator which show me where the price opens at the midnight hour. No, so this vertical line is midnight, and this horizontal line is the when price opened. So as you can see, price opened here, went down, took the previous day low, the same here. So this is fake move, okay, because we have a lot of liquidity waiting here. You see this like trending line. This is not a trending line, this is just honey for the price, okay. So makes sense also if you see the big picture of during the week, price just was falling and falling. So and we have the divergence, right? Remember, sorry, here. So it's like a puzzle, which if you put the right in order the elements, it makes sense to have a bias. So price opening took the previous day low. In the case of US30, it didn't make that. Okay, so that's a red flag to be careful and think, okay, maybe we're not going lower, it's just price want to take the previous day low for later continue higher. So that was like a clue, yeah, I have in mind. And also think that at 10 a.m. was a high impact news. So this drop was before 10 a.m., which time is here. 10 a.m. is here. So it happened before. So normally if a price to a movement previous the high impact news, you can expect the opposite reaction. So lower, high impact news, higher, you know? That's a bit of the tricks you learn with the experience and reading the market and having these concepts in mind. So makes sense, right? That's power of three: accumulation, manipulation, distribution. Okay, so I think that was my analysis during the week. Guys, if you want to say something, you have some questions. In my private group, I share a lot of more information and analysis and everything. Yeah. On coffee, I'm observing how price react to this 4-hour imbalance. This is a commodity, right? This is just coffee, it's commodity. But look, this huge rocket price action, which will be later have a retracement, right? But I'm just checking this imbalance here, which price is already here now, and I'm watching how it reacts. And that's all, guys. So if you want to share some thoughts or something, you're welcome. On the big picture, I'm waiting for price to go in still lower. We have this inversion fair value gap. We have this low here. And if price wants to continue lower, we have this imbalance here, this weekly imbalance. So remember, if dollar is bearish, the other assets like Euro USD, GBP USD are higher, bullish. So that's why I have this these levels here. I'll take off this. In Euro USD, I have these levels. I have a monthly imbalance here. See, that's my target right now. So bullish. Okay guys, so if you want to share some feedback or something, I will finish this live stream and I will upload it in the private group. And yeah, maybe see you next time, next week. So text me if you want to share some feedback or some thoughts. I will be very happy to have a chat with you and share some opinions, thoughts, and bias. Okay, so thank you guys, thank you. See you next time.